There are a few pieces of so-called investing wisdom that people keep repeating, and they're completely wrong. Let's go through the biggest investment myths of all time. Myth number 1, you can't time the market. That's false. Warren Buffett proved you can. Before the 2008 crash, he built up billions in cash. When markets tanked, he used that cash to buy into Goldman Sachs and GE at bargain prices. He did the same again in 2020 and 2023. Timing the market isn't day trading, it's patience. It's knowing when prices are extreme and waiting for the right setup. Myth number 2, buy and hold always works. It doesn't. GE was the biggest company in the S&P 500 in 2002. 20 years later, investors who just held the stock made nothing. The company lost its edge and the market moved on. Buy and hold only works when the business keeps growing. If the story changes, your strategy should too. Myth number 3, diversification keeps you safe. It helps reduce single stock risk, but it doesn't protect you from a market crash. In 2008, stocks, bonds, and real estate all fell together. Diversification didn't save anyone. True diversification is about timing and catalysts, not just owning more tickers. Myth number 4, the market always goes up in the long run. That's what investors in Japan thought too. Their Nikkei index hit its peak in 1989 and still hasn't fully recovered more than 30 years later. Time alone doesn't guarantee gains. Buying at the right valuation does. Myth number 5, high risk means high reward. Not really. Most high risk bets fail. The best investors, people like Buffett and Druckenmiller, don't chase risk, they manage it. They look for asymmetric setups, small downside, big upside. The truth is, the best investors question everything, even the so-called rules, because the biggest myth of all is that success in the market comes from luck. It doesn't. It comes from preparation, patience, and timing. And this is where tools like LevelFields AI give everyday investors a real advantage. LevelFields tracks market events that professionals watch, things like dividend hikes, buybacks, and major contracts, events that often lead to those asymmetric opportunities the best investors look for. It's not about predicting the market, it's about being ready when the setup appears. That's how you trade with confidence, not by following myths, but by following the data. Follow and subscribe for more. LevelFields Elite Investing, Effortless AI.